that Binance is strongly leaning towards scrapping its FTX takeover, and that's exactly what our next guest is warning about. Let's bring in Kavita Gupta, the Delta blockchain founder and general partner and an equity holder in FTX. Kavita, great to have you with us.
Thank you, Melissa.
So you're an equity holder in FTX. When did you get in? I mean, it was just 2 months ago valued at a $32 billion valuation, and now it's a shadow of its former self.
It was through the fund long time back. It was pre-Series A. So, of course, the valuation has been up and up, but very few people saw it coming, especially earlier days when we saw Celsius going down. FTX and the founder has been going out. Sam has been tweeting that this is why we have such amazing risk management at FTX. None of the customers' money ever moves. So you always have liquidity, whatever the customer puts. It's actually a part of their contract, which everyone signs when they open the account, that they never loan, trade, or move customers' money from the exchange. So now seeing a centralized exchange literally going down of that value with some of the most heavyweights from Silicon Valley to crypto native funds has been a really big bloodbath for the space.
How do you think about the ripple effects here, Kavita, in terms of the impact on funds that have been investors who now have to mark down those investments to zero, potentially, their ability to then deploy money elsewhere, them maybe being locked up in other crypto-related companies that are also taking huge hits of valuation just because of this larger crisis of confidence in this industry?
I think what you said is definitely a lot of really multi-billion-dollar fund would have to put it down to zero, because I said that yesterday, I'm saying it today, though now CoinDesk is reporting it. I don't think it was that Binance would go ahead with this deal. It just doesn't make sense. But coming back to your question, I think there are multiple impacts to it. First impact is, as you noted, that a lot of crypto funds have to value it down. The second impact is over $2 billion investments done by FTX into crypto companies. Their accounts are with FTX. How many of them are able to move their treasuries out of it? Then you're talking about the layer one solutions, whether all the alternative chains, whether it's Solana, whether it's Aptos, Sui, bunch of them, their really big treasuries are on FTX. How's that going to move? And another impact, which people are not even thinking about it, if those treasuries don't move, then the whole startup companies, you're talking about 1,500 to like 3,000 companies, having a lot of issues on surviving this in the crypto winter, which also indirectly comes back to the crypto VCs, how we going to take care of it with so many of our other companies, and the regulations on top of it with the existing exchange. So I see that we have not seen the bottom of it, and the ripple/cascading impacts are going to be huge over the next 2 months to be absorbed.
When you say treasuries, you mean capital, just working capital for operations, yes, day-to-day operations of all of these companies that have some sort of affiliation or investment from an FTX?
Yes, absolutely. And a lot of DeFi, and most of the DeFi zones were happening on FTX,